Hi guys, Gerrit here. Hope you are all doing well. Now, before we dive into this video, I thought I'd share with you guys that I spent the past few months creating my very own trading course, and it's compiled out of everything that I've learned over my 3 years of trading experience, and I go into all of the detail regarding everything that you need to know. So like the title says, it's a complete Forex trading guide for beginners. I go into the background of Forex, go into technical analysis, fundamental analysis, the different trading platforms you can use. I share with you 4 different trading strategies that you can implement, the psychology of trading, and how to create your very own trading plan. So literally everything that a beginner or even a person with some experience in the Forex market can use to improve their knowledge of the Forex world. So I thought I'd share with you a snippet in this video of one of my lessons in my trading course, how to implement a bracket order in your trading plan. So if you enjoy this video, if you enjoy this specific lecture, then this is just what you can expect from my trading course. And if you want to learn more, if you want to find out a bit more about my trading course, I'm going to provide the link in my bio and you can check it out. And I really do believe that you'll benefit a lot from this course, but I might be just a bit biased seeing as it's my own trading course. But yeah, I just thought I'd share with you a snippet into my trading course that I created, so I hope you guys enjoy. In lesson 5, we will be discussing how you can create your very own trading plan to implement whenever you enter a trade in the Forex markets. Now, Benjamin Franklin probably said it best in one of his famous quotes that if you fail to plan, then you are planning to fail. And that is so relevant in the Forex markets because whenever you enter a trade in the markets without a clear trading plan in mind, then you are setting yourself up for failure in the long run. And it's therefore so important to have a clear trading plan with a predefined set of trading rules that a trade needs to adhere by before you even consider entering a trade in the market. So a trading plan is the difference between being a successful Forex trader and just being a gambler in the Forex markets. Now, to help you create your very own trading plan, you will be making use of all of the skills that you've learned in this course up to now, together with the different lectures in lesson 5, starting with bracket orders. Now, every trade that you will ever take will always have 2 possible outcomes, either profit or loss. And where you decide to enter and exit a trade is very important and determines whether the trade results in a profit or a loss. And successful Forex traders always ensure that they have clear entry and exit plans in place before taking a trade, and therefore make use of bracket orders which implements both entry and exit plans. So a bracket order contains your entry price, so where you decide to buy or sell a trade, as well as 2 potential exit prices where your trade automatically closes with either a profit or a loss. So bracket orders contain 3 different price levels, namely an entry price, the price where you buy or sell the trade, a stop loss price, the price where the trade exits with a loss, as well as a take profit price, the price where the trade exits with a profit. So let's take a look at how you can implement your bracket orders for both long and short positions. After performing some technical analysis on the Euro-USD chart, you expect price to increase in the near term. So you decide to buy the Euro-USD at 1.1850. So this is then your buy entry price for the long position. So now that you know exactly where you want to enter this long position, you need to decide where you are going to place your stop loss in the market. So after performing some more market analysis on the Euro USD, you decide to place your stop loss at 1.1830, and that is 20 pips below your buy entry. So now that you have your entry price and as well as your stop loss price for your bracket order, you need to decide where you are going to place your take profit order for this Euro USD trade. And you decide to place your take profit at 1.188 in the market, which is then 30 pips above your buy entry. So now you have your exact entry price, stop loss price, as well as take profit price, which then completes your bracket order. So it's important to note that your take profit price level is always above your buy entry for long positions, just as your stop loss price level is always below your buy entry for long positions, because you are looking for price to increase in the near term. So after you've entered this trade over here, if price decides to go against you and turn around lower and hits your stop loss price, then you are automatically closed out of your trade with a loss. Similarly, if price decides to go in your favor and go higher and reaches your take profit level in the market, then your trade automatically closes with a profit. So that is an example for long positions. And for short positions, similarly, after performing some technical analysis on the Euro USD, you now expect price to decrease in the short term. So you decide to sell the Euro USD at 1.1850. So this then becomes your sell entry price for this short position. Now you determine that you would like to place your stop loss at 1.187 in the market, which is 20 pips above your sell entry. So now that you have your exact entry price and stop loss price, you determine that you want to take profits at 1.182 in the market, which is 30 pips below your sell entry. So you have your exact entry price, stop loss price, and take profit price to enter in your bracket order. So it's also important to note that your stop loss price level is now above your sell entry, and your take profit price level is now below your sell entry, because you are looking for price to decrease in the near term. So if you enter the sell trade over here and price turns back above and reaches your stop loss price level, then your trade automatically closes with a loss. Likewise, if price continues lower and reaches your take profit price level, then your trade closes with a profit. So this sell entry is then your entry plan, where you decide to enter the market with the stop loss and take profit price levels being your exact exit plan for this specific short position. So that then completes the bracket orders, which contains both your entry and exit plans for you to implement whenever you decide to enter a trade in the markets.